Today's episode is brought to you by FinBite Insights. So this FinBite Insight is started by Alvin, and that's me. And each day I will articulate my thoughts about the financial markets. Just by reading in less than 3 minutes, you will be able to get a very good understanding about what's going on, what's the most important thing that you need to know about the financial markets for that day, and how do you interpret it so that you can make better investment decision out of it. So do remember to go to finbiteinsights.substack.com and you can subscribe it for free and start enjoying the daily insights that I'll deliver it to your inbox. Hi there, this is Alvin from Dr. Wealth. It has not been a good few days for Elon Musk, right? First of all, we heard in the news that SpaceX Starship has just exploded midway. We also hear about the complaints of Twitter dropping the blue tick, the legacy blue tick, and now you can only get a blue tick if you pay for it. So there was a bit of hoo-ha over there that caused quite a lot of unhappiness with Elon Musk. And lastly, Tesla results has been out for the first quarter of 2023, and the results was not pretty because the profits have dropped. And that was due to the many price cuts that Tesla has made. So in this video, I'm going to zoom into Tesla because that's the only investable company at the moment that is belong to Elon Musk. And of course, I want to help you sense make why Tesla is cutting the prices and why I think that it is a very smart strategy move that's going to impact a lot of competitors going forward. So following the results of the first quarter release, Tesla share price has dropped as much as 10%. And I think that there is some auxiliary reasons that is linked to Elon Musk, which is coinciding with SpaceX Starship blowing up, right? So I do think that has some impact, but logically it should not, because SpaceX is not part of Tesla at all. Tesla is just more of a car and an energy business. And some of the price drop is warranted because if you look at the quarter results, the gross profit has dropped 17% compared to first quarter last year, as well as earnings per share has also dropped 23% as compared to 1 year ago's quarter results. And even the margin has been compressed from 18% has compressed to about 11%. Yes, Tesla is still profitable, but you can see that the profitability has dropped. And this is largely due to price cuts that Tesla has done. Year to date, Tesla has already done 6 price cuts, 6 times in about 4 months. So that is quite an aggressive move. And that is not the end because Tesla has also voiced out that more price cuts are going to be expected in the future as well. So which means that in future quarters, we might see further margin compression, further profits decline in Tesla results. So don't be surprised if that happens eventually. I lifted this phrase out of the presentation slides Tesla has provided for the quarter results. And I think this is the key why Tesla is cutting prices, right? So as I read it, as many car makers are working through challenges with the unit economics of their EV programs, we aim to leverage our position as a cost leader. Okay, so there is a lot to unpack from here. So I'm going to explain to you why this is a very good competitive strategy that Tesla has adopted. So first of all, Tesla has always believed that the EV prices have to come down in order for mass adoption to happen. So yes, EV sales has been growing very well, but it is still not majority of the car population. In order for EVs to overtake the internal combustion engine, EV has to become cheaper over time. And in order for prices to fall, that means that the cost of production has to go down as well, right? Why would you run an unprofitable business for a long time, right? For maybe initially you want to do it for market share, but eventually you do still want to make a profit out of selling cars. And that's why Elon Musk believes in changing the entire way how cars are being manufactured, right? So he didn't have any baggage because it is not from a legacy auto car maker. He has no workers union to deal with. He has no legacy machineries to deal with, work processes. So he could really redesign everything from scratch. And if you take a look at the Tesla factories, you don't see a lot of workers, right? There were a lot of automation as shown in this picture, a lot of robotic arms. So this is deliberate because with that, it can really save a lot of manpower. It can really shortcut the processes, have more efficiency inbuilt in it. And the second thing that he managed to do was to make Tesla the best-selling EV, right? When we are talking about best-selling, we are talking about the battery, 100% battery-operated ones, not the hybrids where there's a mix of internal combustion engine as well as a battery. So if you just focus on a 100% battery vehicle, Even in 2022, Tesla is the best-selling brand around the world. So BYD came in a second. But if you include the hybrids, then of course BYD will supersede Tesla, right? So if you want to be purist about it, Tesla is the pure EV play here. And what does that mean? It means that as an EV company, Tesla has already achieved the economies of scale. And that means that it can negotiate for lower battery prices, raw materials, so on and so forth, and that helped to achieve a lower cost of production per vehicle. And because of the two reasons, right? First, the redesign of the entire manufacturing process for the cars, and second, it has reached economies of scale that has helped really to bring down the cost of EVs for Tesla. For example, in 2017, it would have cost Tesla $84,000 to produce an EV, but in 2022, that cost have came down to $36,000, less than half since 5 years ago. And that's one of the key reasons why Tesla can afford to lower the prices. So now competitors are caught in a dilemma, because if you think about this, right? So many of these EV makers, they have not reached the economies of scale. Some of the legacy automaker may still be using less efficient way of manufacturing a car, so their cost is higher. So if they cut the prices together with Tesla, that means that they can enlarge the losses, right? Especially if they're still not making profits out of it. Out of so many car brands, car manufacturers, Tesla has one of the highest operating profit margins out there. So it is very likely many other automakers have limits to how much they can cut their prices without incurring a big loss. And let's say they decided not to cut their prices, to maintain their prices, and that would mean that their sales will suffer and the gap between Tesla and their sales will widen, and Tesla might even capture some of their market share. So you can see that it is like in a lose-lose situation. Whichever the path the competitor take is going to have some impact to its business. And some investors might argue that if Tesla keeps cutting prices and eventually it sells quite close to what an average car costs, would that impact Tesla as a premium brand? So far my observation is that it doesn't really hurt the brand for Tesla, because even all these years Tesla has been lowering the prices and yet the brand value has increased, and that is according to Kantar Brands ranking. So in 2021, Tesla brand value was about $43 billion and it was ranked 47. And in 2022, Tesla has increased its brand value to $76 billion and moved up the rank to 29th. So you can see, despite cutting the prices, Tesla still managed to grow its brand value. Tesla has already achieved a considerable amount of mindshare, because if, let's say, I ask you, which brand do you think of first if we talk about electric vehicle, right? I would believe that many would recall Tesla as the EV brand. So you can see that this brand recall or this mindshare has been quite strongly linked to the entire EV industry. And don't forget that Elon Musk is like the poster boy, the advocate for Tesla, and he's very active on social media. He has a cult following him, and he has been always promoting Tesla among other companies that he owns. So with that, I would think that the Tesla brand will only get stronger and not weaker. And another point to make is that despite Tesla still charge a higher price than majority of the cars, especially the average cars out there, it still managed to outsell the cheaper ones, right? Because it is the number one best-selling brand of EV in the world, and it is not the cheapest. So you cannot say that it is because of price, because that's why people chose Tesla. It's because of the branding, such that the price doesn't matter. And if, let's say, the price become even more affordable, it helps the consumers decide even easier, right? Because I like the brand and now it's cheaper, I don't need to consider anything else. So that is why I think Tesla with this price cut is quite a shrewd move. So in summary, we have discussed that Tesla already has some competitive advantages because it has a lower cost of production. It redesigned the entire manufacturing process from scratch, and it has economies of scale because it's already in the world's best-selling EVs, and it produces that kind of numbers that others have not matched up with. And it has tremendous branding power such that people will tend to consider Tesla as one of the EV choices if they want to purchase one. And because of their competitive advantages, they are able to lower the prices without hurting themselves so much, right? As opposed to hurting the competitors. Because for Tesla, it is already profitable, and the profit margin has been fat compared to many of the manufacturers out there. So by lowering that prices, yes, they do get a hit for their profit margins, but it is in the bid to gather more market share from the rest of the brands. And we discussed this because competitors will be left in a bind, right? If they cut prices, they're going to make more losses. If they don't cut prices, they're going to lose market share. So you can see how shrewd this move can be. And I do believe that the majority of the competitors, especially the smaller ones, will feel a lot more heat from Tesla, right? Of course, the bigger ones like BYD may still be able to hold their fort, but I won't be surprised if Tesla capture more market share in years to come. Hope you like this video. Give me a thumbs up, subscribe to the channel so that you not miss another analysis like this again. This is Alvin. Goodbye.